Welcome to the weekly market update for this week, December 15th. I'm Gordon Scott. I'm happy to be with you. I'm really happy to be with you this week because, unlike in weeks past, where in the US, 5 o'clock p.m. in Singapore time is 2 or 3 o'clock a.m., I got to get up in the middle of the night to do this. This time, I'm actually in Singapore. And so it's light and it's 5 o'clock in the evening, and it's much more convenient for me. So I'm very glad to be here doing this at this time. This is an interesting week. I've got a couple of charts to show you, and bear with me. I hope that you'll be able to try to understand the sort of thing I'm putting together. But to make sure you don't miss the point, I'm concerned that the very strong US dollar that we've been seeing uh, will come to a screeching halt towards the end of December and early in January, and that it might take a serious dive right about the time US stocks also do so. Now, this might not happen, but conditions are setting up that it could, and it's something you want to keep an eye out for. I'm going to show you why I say that. Meanwhile, it also looks like the pound and the Canadian are particularly weakening. This may have a lot to do with the talk of tariffs in the incoming Trump administration. There's a lot of debate on what impact tariffs will have ultimately. But right now, President-elect Trump is holding out the idea that he's going to implement these tariffs, and that's something he can do with the stroke of a pen. He doesn't have to, get Congress to vote it in or anything like that. And so tariffs could come swiftly, and the market's acting as if they are expecting those tariffs to come swiftly. I think that's a big reason for the strengthening dollar. But it's interesting to me, isn't it interesting to you that the although the dollar is strengthening against the yen, it's strengthening more against the pound and the Canadian dollar. I think that it's also well understood that Trump might be talking a game of tariffs rather than planning on a game of tariffs. I believe he's intending to use these as bargaining chips to try to get other political or economic concessions. And the problem there is nobody knows exactly what he has in mind or what his administration has in mind. What kind of concessions are they trying to get? So the problem will come regardless of whether or not the tariffs. I think the tariffs are kind of a tempest in a teapot right now, and the currencies are really moving because they're expecting tariffs to come. But sometime after the inauguration and deep into January, sometime after the Chinese New Year, probably we'll see the true impact, whether or not those tariffs are going to get implemented, and whether or not they're going to have an effect on anything. And so right now, the market is just acting in sort of fear and apprehension mode. It's the interesting and most important thing about that is that if things don't transpire the way the market expects them to transpire right now, then we'll see big retracements on those. And that's the first component for what I think could happen with the US dollar. A lot of fear and concern about the impact of tariffs. And so US dollar is strengthening against many other currencies. And I think that there's a real possibility that late in December, early in January, we could see that sort of shift, maybe even going into February, we could see that completely reverse. And that is a huge opportunity for anybody who is prepared to go long the pound, long the Canadian, long the yen against the US dollar. So that's something to be aware of. There is another factor, though, that has to do with the US stock market that could also sort of feed this dynamic and make that trade all the more interesting and all the more intense of a possibility. So now what I want to try to do here is share my screen with you and give you an idea what I'm talking about. So first off, let's go look here. This is the US dollar yen. And hopefully you can see this chart that I'm sharing with you. There's really not much to it. This is a daily chart, and you can just see here in the last couple of weeks how we've got movement from the low there at around 149 up to where it is now, about 153 and a half. Let me see. Let me just double check. Are you able to see that screen? I'm going to look in the chat for any comments. Yes, we can see it. Thank you very much, Yassine. All right, let me go back there. Okay, now then, that's the US yen. Okay, and if I can squish that, oops, wrong way. If I can squish that more, you can see it's already been higher. It came down, and now it's rebounding. But let's change that. Let's compare that to the I got to get a different watch list going here. Where's my? There they are. FX pairs and U.S. dollar Canadian. See this chart here. I mean, this is the Canadian over the past 3 months. The U.S. CAD over the past 3 months, and this is even before the election. So this is a huge. I mean, the election is right in the middle of the chart. We see you got those big bars first drop down, then goes up. But generally speaking, that was just the middle of an already existing upward trend. And so while the dollar yen has a little bit of strength over the past 2 weeks, this has an extreme amount of strength over the past 3 months. And if we go and we look at the pound dollar, see, because the pound is in front of the dollar, this time we're going to expect the chart to go down. And you can see it looks very similar to the CAD. Big downtrend right in the middle of the chart where the election is. You get this whipsaw going back and forth because the election happens and people aren't quite sure what to do. And then just here in the past 3 days, specifically, a strong downward move. And one more I want to show you. Let's see. We're going to look at the euro pound pair. Now, the euro pound pair has been in the past 3 months just slowly, it's been in kind of a range, slowly deteriorating. But here over the past 2 days, we've got this massive reversal heading up. And this is the euro strengthening against the pound. So just like the pound weakened against the dollar, it also weakened against the euro just in the past 2 or 3 days. So these are the vulnerable currencies in this current dynamic: the pound, the CAD, and the yen. Now, if we go to look at the Australian dollar, we see the Australian dollar has been on a steady downward slide also. So you could say they are, but you see what's going on with the Australian dollar there? You see that the last 3 days is not this big directional move. It's this sort of back and forth stuff. So it's possible that we're with the Australian dollar, just like the euro. We go to the euro USD. The euro's had a big, strong down move, except about the past month. We've gone into kind of a channel on the euro compared to the US dollar. So I think that that's the script for the Aussie in the next week, 2, 3 weeks, just sort of holding its new pattern. And further evidence of that is this. We've got the Aussie yen pair, Aussie dollar against the yen. The yen is weaker than the Australian dollar right now, as we can see, because the Australian dollar went running up against it, held sideways, dropped down hard and then now has reversed just here in the past week and started heading upwards. And so that's a pretty good indication that Australian dollar has some strength over the yen. That's why I didn't select it as one of the highly vulnerable currencies going forward, vulnerable compared to the US dollar. So, what does that mean? Well, it means you can look for long trades on the Aussie yen. Sorry, right there. Okay, look for long trades on the Aussie yen. If I go here, maybe I can, show this to you. Or you could look for short trades on the pound dollar, Aussie yen. There we go. There's a nice, if I can squish this chart in far enough, I don't know that I'm going to be able to do that. There we go. There's this nice channel that you can kind of see here. Aussie yen made this huge, huge drop in July, right at the point where, I mean, I don't know if it's related. It probably has more to do with Australian RBS rate changes than it does the US election. But that huge drop coincides with the ending of the Biden campaign and the start of the Harris campaign. So I don't know if that's related. I do know that since then, what we've had is this upward channel, and we're down in the bottom of that channel. And during the last week, at the trading retreat here in Singapore, that's why I'm here. Paul Botterill has me out for that. I made 7 trades, 2 of which were these 2 right here on the screen. And they were what I would call reversion to the mean trades, right? So this big long channel here going back and forth, I'm looking for it to kind of come. I don't know if it's going to go all the way back up to the top. That'd be great. But when I play reversion to the mean, I just say, okay, I'm in an extreme, and I'm going to try and grab a couple of shots. The first one was real easy. I mean, it was just a little too easy. That's the first one is this one here, where I just risked to make one, and I created a trade where I risked 120 pips on the bottom and 60 pips on the top, and that happened inside of 4 hours, and so I took the profit. Hooray, right? But then my Edge Finder, the software that I use, you can check it out at myedgefinder.com. Right after I came up with that trade, a couple of days later, it came up with this trade. And we ended the week before this one could complete. But as you could see, it's off to a great start, and we'll carry it in the next week. And the trade that my Edge Finder showed was 86 pips risk and 120 pips gain. And so, if it gets up to that kind of the top of that green box, that would be the profit target. These are the kinds of trades you can make with the Aussie yen. Is looking for that sort of reversion into the mean when it's down below that sort of line area there. The pound, on the other hand, you're looking for short trades, pound dollar kinds of trades. That one, you see, we've got those 2 big bars. I imagine we've got 2 more down days to go there, but on a smaller time frame, let's look at something like a 1-hour chart. There might be an even easier to trade opportunity. So we've crossed that line there, and we're coming down, right? And right at the last of the session, you can see it sort of contracted in price and then closed on a down candle. That hour was a down candle, and it closed on a significant low, a multi-week, multi-month low. we're going to be really interested to see how when the market opens up, where it's going to be. Is it going to continue? Is it going to just drop down and keep going? If it gaps down in any way, I think that's a trade. I think that's a signal because it shows the weakness is continuing. That's not what I expect to happen. I expect a little bit of a gap up, and then watch for a retracement. Look for any sort of you know hesitation or resistance on the hourly chart. And when you see it, then set up, easiest thing to do, set up a trade that goes short. And you want to risk something that is kind of typical for a 1 hour time frame, maybe double that amount. You could use the ATR to do it, or you could just eyeball it and say, hey, what was the difference on these candles, right? 126.36, and down here it's 126.14, 16, 20, 22 pips, right? So like risk 40, say 45 pips, and take half of that, 22 pips, as a profit target. And that's the way I like to play it. Risk two to make one. I know that my losses are bigger when I do that, but if I'm trading with the trend, I will tend to win more than 66% of the time, which is what I would win even by random. And if I win, 70, 71, 72% of the time, then that's over many trades. That's where I make my money. So anyway, that's the kind of trade you could do on the pound. And let's see, the Canadian, the US Canadian, I should say. Come on, there we are. So US CAD is, going to be long, right? Now it might, I would expect, just like the pound, I don't expect the pound to continue. I expect the pound to reverse a little bit. I expect the US Canadian, to also reverse a little bit. So it's going to come down, it's going to find some support, and then when you find that support, time to go long on this. Same kind of situation. You could risk, 40 pips and try to take 20. Or if you feel like you want to give it more room, 50 and take 25, that sort of thing. That's to set up the risk two to make one, which I really feel strongly that when you're doing reversal to the mean trades, that's the best kind of trade to do. Okay. Now, I want to switch gears here and go over to different watch list and tell you sort of behind the scenes. This is what's sort of driving the U.S. stock market and how that might play into the activity in the currency markets. So if you look here at this list, this is what happened. This is how the market closed on Friday. Okay. And that's Intel, tech chip company, and minus 2.2. That's a bad day for Intel. Newmont Mining, that's gold mining company, they're down 3%. Bad day for Newmont. Freeport-McMoRan, also a miner, down 1%. Not nearly as bad as Newmont, but Freeport's got, copper and other things going on there too. Advanced Micro Devices, chip, minus 2.83%. Airbnb, down 4.7%. That's a whole nother storyline there. But stick with me. Gold, GLD, that is, the ETF, it's off 1%. Housing, 1.2%. That goes with the Airbnb thing. American Tower Corporation, this is cell phone towers. It's commercial real estate. They're not down nearly as much. Meta Platforms, technology, down. Bank of America, not down as much, but still down. Amgen, pharmaceuticals, down. Netflix, entertainment, down. Verizon's up. One of the few that was up in my watch list here. The Russell 2000, down. Sorry, dry throat there. Microsoft off a little bit, but General Motors up. And there's the big one, Tesla. Against all the wind or the headwinds of the US market going down, here's Tesla going up, and not just a little bit, 4%. And in fact, if I click on this and look at the chart with you, look at that run Tesla has had since late October. And the election is right here. And between the connection with President Trump and Elon Musk, you can imagine that people thought, oh, Trump's going to behave favorably to Elon Musk. And so maybe this big move here is people thinking that Tesla is going to get some special treatment from a Trump administration. I don't know. It could also, and this is probably more likely, be that the tariffs, the talk of tariffs, are going to protect Tesla against Chinese electric vehicle makers. I don't know if you remember, but when Biden got elected 4 years ago, during these months, November to the end of the year, Chinese electric vehicle stocks looked just like this. They just took off, launched. And now we've got Tesla doing the same thing. Is it possible that this is sort of an undoing of what happened 4 years ago? Or at least the market's, thinking that that's what's going to happen? Don't know. All I know is that Tesla is pretty strong while the rest of the market looks pretty weak. So if I'm interested in buying something, I'm interested in buying Tesla. NVIDIA, most influential stock on the US stock market right now, it has eclipsed Apple and Microsoft for its influence on the indexes. This looks weak in a scary way. I don't know if you can just, if that jumps out or not, but this is a big head and shoulders pattern right here. You see this, not quite all the way to the left side of the chart, but about where that dashed line is. You see the sort of left shoulder and then the head, the higher bump in the middle, and then the right shoulder, right? That's like a triple top with the middle one being a little higher, and that sort of dashed line. That's just the close. That's why it's there. It's not a line of, the neckline of the pattern. That would be a little bit lower, but you could see it. You could see the neckline where it is. And, one good break below this, what we've got is the beginning of a potential downward trend on NVIDIA that could go from 135 all the way down to about 115. It's a volatile stock, so that kind of a move wouldn't really shock anybody, but it's a big enough move that if you knew it was coming, you could make significant money by playing the short side or doing put options. But if NVIDIA goes down that much, 15% drop, what's that going to do to the rest of the market? Well, it's going to be significant. Here's QQQ. It doesn't have any weakness. It's just raging to the top. If NVIDIA starts coming down, though, this thing will top out and show some weakness. I'm expecting that might happen in the next couple of weeks. SPY, it has already hit a bit of a top. See that here just in the past week? It's possible that if NVIDIA comes down hard and the tech stocks, we just saw on Friday, a lot of the tech stocks were very weak. If in fact that happens and the NASDAQ sort of curls over, the S&P 500 is going to get drugged lower. And as it moves lower, as it gets dragged lower, I think then that we could see a little bit of a reversal, a retracement on SPY. And that would coincide about the time that the U.S. market or the U.S. dollar could weaken for a little bit as people began to feel like that their choices about the Trump tariffs or the anticipation of them are overreactions. If the market feels like, oh, no, that's an overreaction, it's not going to have that much impact, then the dollar will come down. And it's also possible then that that will coincide with stocks selling off. So that's sort of a combined trend. I don't expect either of those trends to last long, but they could last as long as a month or two. And that's a big enough move that if you knew it was coming early in January and you could, do shorts or do puts on uh, the indexes starting in the early part of January, that's an opportunity for a really big trade. Final thing I want to say here is there's this thing called the Santa Claus rally. If you look it up, especially as it's discussed by Jeffrey Hirsch, basically you'll see that it identifies the days in between Christmas and New Year's Day as being historically bullish for the US stock market and for the first 2 days of the year thereafter. If in fact those first 2 days of the year are not bullish, but they start off with downward moves, then it's time for you to remember this weekly market update, because that could be the signal that you could be looking at a significant pullback and a correction on the belief about tariffs in currencies and beliefs about U.S. stocks prospects for the coming year. And that's it for today. I'm going to check the chat here to see if there's any questions that have come through. And no chats at the moment. Okay, great. I'm going to assume that everything I said was fantastically clear, and and that you don't have any questions, and that you liked what you heard or felt it was useful. Okay, yeah, Roberto says ominous. You're right. It is. It is ominous. All right. Keep an eye out for that, folks. And, it doesn't matter which way the market goes as long as you have a plan and you can take advantage of it. There's always opportunity out there. Yasin says, if we are expecting a pullback on the U.S. indices, how about gold? Yeah, that's a great question. It's possible that gold will be a hedge against that. I kind of expect gold to come back with the indices, but of course, the thing to notice is, again, the first 2 days of the year, are those days up days or down days in the U.S. market? If they're down days, what's happening with gold? Is gold going up? If so, then gold's going to be your hedge. If gold's going down, then gold's going to pull back right along with it. It depends on why gold's been going up so strongly as it has in late in the year here, right? If the dollar's getting stronger, and it has been, we shouldn't have expected to see gold going up. We should have expected to see gold going down. So, and same thing with Bitcoin. If the dollar's getting stronger, we should have expected Bitcoin to be getting weaker. But they're both going up. So I'm not exactly sure what the narrative is behind that, but I want to pay attention to the correlation. And if, in fact, those first 2 days of the year, gold is correlated, then don't expect it to be a hedge. If it goes down with U.S. Indexes, it's probably going to continue going down. All right, everybody, that's all I got for this week. Great chatting with you.